Before we hop into the Q&A, let's just do a little midday update. And I'm sorry for the background noise and for the small delay. We've got some little cleaning crew here at the house. So I got out of the trade just after 10 a.m. here. So I'm not in it for the lower move. It was one of those things where, let's see if we can get the profile to kind of show that. So this would have been C period before D period. Where is D period? Why is it not? Yeah, right before D period. So if you look at the profile there, it's pretty excess low in B period, which is this low here. And then C period starts to really stabilize, and we were not seeing the buyers. We're still holding over 10K. I made the decision to just take the remaining bit off. Oh, there's actually more. I'm sorry, we're not reviewing the full thing. So anyways, that's my final decision to exit. So we've covered that. We'll cover it more in the review. But some of my position got stopped at the high, right? I had left kind of a series of hard stops throughout this area into this wick, kind of, or the same place where the stops originally were, at least mentally. And then I put hard stops in that area, and it hit some of the position, but not all of the position. Then we found sellers, and we got this weak retracement up into here. I put that size back on. Then I took that size off into this low, and then I exited the remainder of the position as I saw that ramp coming there, the order flow pushing above those highs, and I genuinely thought either we're going higher to truly get this blow off top, or we are rotational, as I was pointing out on the profile, inside that same area that I was talking about on the RTX chart this morning. I'll draw it here, right? And just unable to hold below that. It's the same concept as well of a inverse head and shoulders, right? So all of a sudden that's threatening to upside. Now, I made the choice to pay attention to some of those shorter term things rather than, I like the trade location, let's not pay any attention to any of that, which was kind of the advice I left us with on the morning call. If you recall, I was saying managing that core position, blah, blah, blah. So there's a balancing act there if you allow yourself a high degree of discretion on these type of decisions. Otherwise, it's very straightforward because you have a process for making trade management. Every single trade management decision you have a process for. That's the way most of you guys, except for the highest echelon of you, should be operating. So anyways, there's the update. That's what I did. Doesn't look good with the benefit of hindsight, but it wasn't bad given this box here and how we were just doing nothing inside it and started to feel a little threatened in the position. I'm fine with it. It's a very, very big win. We made our week on that trade essentially, which is kind of sad, but also kind of great that we allowed ourselves to be in that position despite the week. So that's that. Let's get to your questions. Trader Biku says, Merritt, you've said that handling dissonance skillfully leads to mastery of narrative reading and the highest level of nano trading. What factors influence your read of the strength of dissonance present in a given narrative? What factors or kinds of factors constitute strong versus moderate versus weak dissonance? How does the presence or absence of these dissonant factors impact your trade execution and management decisions? Okay, so settle in for 3 or 4 hours and let's hop into this. Unfortunately, I'm just given We've got an hour here tops. We aren't going to be able to almost do this question justice. That's an apology and a compliment at the same time. So let's do our best here. The first thing that comes to mind in terms of, let's see if Zoom does the whiteboard correctly. A lot of times it's been screwing up lately. Okay, looks like we're working. A lot of times, if you have a level here that is bullish, and then you've got that dissonant area here that's bearish, you have dissonance. You have, let's say the market's in the middle. That's where the current market is trading. You have a force acting here. You have a force acting here. That's a dissonant spot. The question is, what factors influence the level of the dissonance? Is it strong, moderate, weak dissonance? That comes down to the overall read from multiple timeframes and where you have the most confluence, and the individual reference. So whatever makes up this bear reference, I guess I should actually, we could kind of, let's forget I said the first part. I'm going to start over and I'm going to say that in a different way and add some more to it. Whatever comprises the bearishness and the bearish line in the sand, if there's a bearish line in the sand, what kind of things could comprise that? The thing that I mentioned earlier, confluence across timeframes, both directional confluence and price confluence, and the strength of each individual reference. Maybe it is kind of one reference there. Maybe it's a handful, but what matters for the second part of this is the individual strength of each of those references. It's strength of narrative reading, and then you need to compare strength of narrative plus extra confluence of all the strengths of narratives against the dissonance. You need to do that same work for all of those things. And it sounds complicated, maybe, as I'm saying this, but it's not complicated. It's complicated sometimes to come up with the read that you want. It's complicated sometimes because we don't have clarity. It's complicated sometimes because the strength of narrative is just low across the board. We've certainly seen that this week. So for example, let's say the bear level has a crap ton of confluence, and the strength of narrative of two of the references that are confluent in that area are fresh shifts in condition, strength of narrative factors, recency of the CVA that's there, blah, 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 blah. And let's say that this bull one here is like something more minor, something less fresh, something lower on the strength of narrative assessment of that reference. And there's 5 things that say that we're bullish, and there's this one thing that says that we're, there's 5 things that say that we're bearish, and there's this one thing that says that we're bullish. That's going to be a fact of, you know it already before I say it, weak dissonance, right? What if you have equal 3 things that are bearish and equal 3 things that are bullish, and one on each of the side of the argument is fresh, really good strength of narrative, and the other 2 are mediocre? Guess what? You have a tie. You have just like these levels are equal. You can either scalp in here, or you can wait for the all clear there. You wait for the all clear there. In the earlier example where the bear one was the strongest, you're looking for this, and you're going to maybe take profits into this, some profits, and then you're going to get even more aggressive to the short side below there. And this might not even be a trade because you're still bearish. You might not trail your stop into this area. You might keep your stop above there, even if you're in from there and it's imbalanced down. So it's while we could talk for 4 hours about it, that is the simple high level answer. It's a strength of narrative assessment for everything. And then you have to ask how strong, when we have dissonance, right? Other times there's no dissonance. That's not a hard thing to talk about. When there's dissonance, you have to assess how strong is the dissonance, right? How strong are each of these opposing forces? Are they equal? Is one of them much, much stronger than the other? That's how you do it. And the other part of the question, how does the presence of dissonance affect execution and trade management? The more dissonance we have, the less aggressive, right, I'll be. Aggressive in terms of re-entries, conservative in terms of conservative scale outs, right? Which is it's a tongue twister. You could say that I'm being aggressive. I'm aggressively scaling out, which is a conservative thing because of the distance. Okay, so play on words, however you want to phrase that is fine. You understand the concept. So which brings us to the other part, which is the most important part of how it impacts my execution. It is trade management. If you've got this level is equally as important as this level, and let's say we're imbalanced up and I'm getting long from here, well, guess what? I'm probably going to full exit into here, maybe just give it, like with my hands on the button, the chance to just blow through. And if it doesn't, and it usually doesn't, I'm banging out. Rather than if this level is a 10 out of 10 and this level is a 2 out of 10, I'll allow it to retrace from there, and I'll actually hold on to see if the imbalance can either continue and we break through, or if the imbalance falls apart and I exit out. Why would I give back all those profits in this situation versus the situation I said where they're equal levels? Because the probabilities favor going with the stronger of the reads and maybe taking some partial profits into the weaker dissonant points. So it's probably nothing new that you're hearing from me here. But maybe it's said in a different way that strikes a chord with some of you a little differently there. Jake says, do you ever use RTH DVA to manage your core or scale outs on rotational trades that you took using ETH DVA, or do you disregard it entirely as the thesis was based off ETH? No, I'll use them both sometimes. When I got long, was it yesterday afternoon? No, the day before yesterday, right? Yes. I don't know, Tuesday. Yes. When I got long here, that's an ETH play. I think it was also RTH if we line up our, oh, I'm not sharing my screen. Here we go. Share screen, screen 3. When I got long here the day before yesterday, yes, it was an RTH play. It was the same play. A lot of times at the end of the day, ETH and RTH are about the same. At least here, they're both the same on the low end, and they're not the same on the high end. So we're running out of clock, right? We've already been through this. We're running out of clock. There's 6-7 minutes left in the session. We reach RTH, and I'm out. RTH plus ETH 10K, like we're putting it all together in terms of what we're looking at. I'm not going to demand that, well, I took it based on ETH, so I'm going to hold out for this ETH level. That's further to go. Order flow is telling me it doesn't want to go any more for any further, at least at the hard right edge at this moment. And we wicked RTH developing value high. Thank you. Come again, right? I'll take it. So that's a prime example of mixing and matching what I'm using in a sense. I would not, to put it simply, I would not lock yourself into, if you're comfortable using both, I would not lock yourself into one. Well, I got in based on one, so I'm going to take the Warren Buffett, approach and hold it until the reason I bought it is not, you know what I mean? Like, we're not doing that. Matt says, what are your thoughts on the future of AI or quantum algos in trading? Matt, Wish I could help you, man. I could give some thoughts. They would be such a waste of everyone here's time. I mean, I think that, markets traded, we can go back at least with higher time frames, like a daily chart and stuff like that. We can look at the patterns and how they moved before there were computers, and we can look at how they move now that the bulk of the trading is from computers. That stuff, it's just always going to evolve. Technology evolves. At the end of the day, at least for now, I know you mentioned AI, and heck, where do you think the forefront of AI is? Do you think it's Chat GPT? You think that's where the smartest people are? No, it's probably stuff with markets with AI, probably. It's probably already there. We just don't know about it, because why would you tell anyone at this point in time? So anyways, I don't have any important thoughts on it. Whatever comes will come. It's, who knows? Brandon, number 1 on April 1st, yearly DVA, quarterly PVA are essentially the same thing, right? Do you diminish the strength of quarterly prior value in the first few days? In terms of looking at those two things, let me make sure everybody understands this. Let's go back to last year. Do I have that much on my quarterly? I should, right? Nope. Okay. Let's theoretically draw it for you. Okay. Yearly DVA, quarterly DVA. The yearly, here's the end of Q1. Here's March 31st into April 1st. The yearly is going to keep on keeping on. Okay. Let's just say it's doing this. And all of a sudden, the quarterly starts a new unusable DVA. It's a new quarter. Well, it's a new month. Sometimes it's a new week. So we're not even using that either. The only thing the quarterly gives us is this brand new prior value that's not going to change, right? No matter how far we persist throughout the rest of this quarter. The yearly is going to, do things, right? It might start heading up, right? And so now the levels are different. But the question is here, a day or two after that transition, they are now unique, different references, but they're not that unique. So you need to, when you say, oh, look, one day after the change of the new quarter, April 1st, oh, look, these two are the same. Well, yeah, because they haven't had time to start to be different, okay? So it's not actual confluence like we might use. But once you start going and once those levels start to become different, this is trading here at, 95, and this is still here at 70, okay? Now they're different. Now they're unique, right? Question number 2 from Brandon. What about if we open inside a new month? Let's say Wednesday, we start a new month. Do you use monthly DVA on Friday, or do you wait a certain number of days? So I'm having my brain, I'm sure your question's perfectly asked, but I'm having a hard time understanding. Is Wednesday our upcoming new month, like actually? So I'll kind of look at the calendar. No, Saturday is the new month. Let's say, as you said, on Wednesday, we start a new month. So this one comes to a close, right? and all of a sudden we start this. I can tell you, I don't know if this is the question you're really asking, but I can tell you, I'm going to be way, 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 way more focused. And by the way, the first day of the month, the monthly is the same as intraday. So we certainly don't use it on the first day. Only when we get to the second day does the monthly persist past the first ETH, intraday. So now it's a 2-day long VWAP, and so now it's different than Thursday's VWAP, and it's unique relative to everything else. But do you think what I was trying to say earlier is I care way, way, way more about the weekly on a Thursday than I do the brand new month, which just began on a Wednesday, on the second day of its existence of its new life, right? It's like an RTH VWAP that like 10 minutes after the pit session open. It's a wee little baby, right? So I don't have a quantitative answer for you but that's kind of it. Hopefully I'm answering your question. If not, you can follow up in the chat. And number 3, does compression eliminate or weaken dissonance? That's how I've been using it so far in order to enter narratives that have been areas that are technically against me. Compression, we don't even have to speak to dissonance. Compression, the proper law 10 compression, right? Some people say, oh, look, over the past 5 minutes, there's an ascending wedge. That's compression. No, that's not the way it was taught, unless that's your contextual time frame. Law 10 compression is about that compression move into areas of narrative, edges of value, essentially, right? So you can actually take dissonance off your question, and it would be included, but it's going to encompass more than that. Compression weakens anything that it's against, whether it's dissonance, whether it's whatever, right? So yes, that's how it works. You can technically, if you're compressing into something and you're already trading, that thing is against you because it's resistance, whether it's dissonance, whether it's just a next more minor area of resistance that it's very neutral, we don't really care about. It's still resistance. So it's a form of dissonance. Fab1 says 1252 Eastern. I took an extreme fade long trade there. Feels a bit aggressive as the market is not accepted in DVA yet. There's still room to weekly develop value high. Would you consider that an okay NADRO trade? I don't think so, but let's double check. I don't think that's good. 1252 Eastern. Is that what you said? Oh, that's 1152. Okay. So the moment in question is right here. So the first thing that comes to mind for me is that your read on the DVA is actually more wrong than you even think. So you're talking about the market has not accepted in DVA yet, which assumes that the market has accepted out of DVA. And that just would not be a very good, accurate read, in my opinion. This is a very rotational day. We have, probed some upper extremes. We're now probing the lower extreme of this DVA. And I just don't think that this move, well, I know that this move is not an imbalance down. So we are never outside DVA. What you're seeing is, oh, look, this and this held entirely outside DVA. We're imbalanced down. That's too quick of a read, too micro of a read to shift to imbalance down. And then so your trade is actually fine. It's perfect in terms of rotational trading, but it feels like that was kind of unbeknownst to you that it was actually fine because you were worried about something that you shouldn't have been worried about because you were misreading DVA and getting a little too micro with that read. In general, though, What are you leaning on for this trade? It's nothing on the yearly. It's nothing on the quarterly. It's absolutely nothing on the monthly. And it's nothing yet on the weekly. And it's not a structural area. So what's the trade, right? Answer is, I believe it's not a NADRO trade. Is it a good accessing a potential trade idea? Yes, it is. Rhythm was effectively used. DVA is effectively used. There's a little bit of a shift in the order flow there. The buyers show us something, and then you're getting involved with that. Oh, I'm sorry, that's after you got in. So I would call order flow in favor of the bears mostly. We couldn't sustain over 10K. And there's no real divergence, just some weak buying most recently. So you don't really have anything there either. So no, it's just not a great NADRO trade. It's not. Thanks for putting yourself out there though and asking that though. You're going to get better from this interaction. Other people who aren't putting themselves out there like that are not. So good on you. Matt says, I've been trading micros for nearly a year and pay a lot in fees and commissions. I've tried to move to the mini to save costs, but then lost a load trying to big size relative to my account. How would you suggest I get out of this vicious cycle of paying too much in fees, not making any money on the micros compared to overexposing myself in the minis? It's tough. I mean, I get it. I think that while you're trading micros, you need to almost see yourself as just paying a lower cost, and that's a good thing, tuition, while you're trying to get good enough trading micros to cover those costs. So you don't need to be trading a bunch of micros if you're trading micros. You could think of it like, first of all, go prove that you can make some money on sim, because if you can't do that, you're not ready for micros. So start on sim, prove that you can do it there without the pressure of real money, but treat it as serious as you can so that you're getting higher quality reps. People who don't treat sim seriously, but maybe don't have the capital not to trade sim, guess what a perfect solution for that is? A tryout like we have. I used to always say the only people that should enter our tryout, or whatever other one out there, if you don't like us, hopefully you guys like us, is when you're ready to try out for the team. You don't go try out for the team if you suck at something. That's how I originally thought of it. But after working with more and more students and seeing some of the situations like this, especially around some financial details, it actually makes sense that you limit your losses to $300 a month or whatever it is for the tryout. And you do care about that. And you are going to be pissed if you violate the daily loss limit and have to pay that $100 to reset. You have skin in the game. It is going to matter to you. And so that's actually a nice training vehicle while you're ready. And guess what? If you pass it, then you have fantastic cost structure and with a prop firm and things like that. So that might be something to consider. Another thing, as I mentioned before, if you're not successful with micros and you can't cover costs, you might just go back to sim for a while. That's free. Again, if you can't take sim seriously enough, tryout is option 1A or 1B or whatever. The other thing is just a mentality of, look, if you don't want to do the tryout for some reason and you don't want to trade on sim for some reason, trade as small a number of micros as you can. That might be 1, right? If you have to have a scale out, it's 2. If you have to have 2 scales, it's 3. And then the conversation should stop there. Don't tell me you need 6, because you don't. You can view that as simply training grounds. Stop worrying about costs. Just don't even pay attention to them. I don't care if the costs are what's eating up your account. That doesn't matter. What matters is that you're not profitable enough to cover costs, even though the costs are higher than they would be if you moved on to other products. It's just your training grounds. So just focus on your gross results. I understand that your net results are not going to be nearly as good. It doesn't matter. If you can start to do it gross and start to put up just the smallest amount of positive expectancy with any consistency, guess what? You're there. You're arriving. So anyways, I know a lot of people ask things around that. And so that's my take. Melanovel says, Merritt, tell us a bit more about your prop desk team, some themes you focus on to build awesome team culture. Many thanks. I don't know how good of a leader I am. I try. But yeah, I mean, our culture is openness, sharing, checking egos at the door, being essentially go pick up a copy of Ray Dalio Principles. That is kind of the culture that I have for our desk. You can correct me, right? You also need to understand that you have perhaps a I forget what he calls it, a believability index, I think is the term. Don't talk to me like you're an expert on order flow if you don't know crap about order flow, right? Or feel free to chime in, do that in a healthy, objective way. But then other people need to you need to be honest and open, and other people need to be honest and open about where you are on that spectrum of that topic. And that goes for me too, right? It's not like, obviously the buck stops with me. This is a small shop and it's my shop, but my traders are to speak honestly and authentically and to, give me feedback on anything. So things like that. That's really the culture. Hard work outside of trading hours, reviews, honesty with yourself, fairness with yourself, and trying to get better every day. That's the gist of it. Lovicenzo, if we have a CVA or PVA and the price break and goes directly to the other extreme without a pullback, is available an entry if the price goes back and then gives the pullback? I'm concerned it's valid once the destination was reached to take that kind of entry. Your concern is not wrong. Give me one moment. You're not wrong. It's basic laws of market dynamics. If we get this condition shift and you're licking your chops to get long from here, and it does this, and then you end up here, this, let's call it a plus, this goes to a B minus or C plus at best, right? That's because of what you mentioned of that destination already being hit. So, I mean, your question is there an available entry? And the answer is there could be. It's still a small, let's say, edge against that edge of value. But what I would then do is go look elsewhere, as in other time frames. What does this one say? What does this one say? Do we have any other confluence here that gives us another reason to trade that level? Do we have other, even if not price confluence, do we have other time frames which are saying, hey, we've got really, really high quality destinations higher than we went here. They're still trying to work towards those. So it's more of a continuation play, but a directional bias confluence, right? So that's one of the, it feels like almost themes of today's talk in this Q&A, is that there is the individual of references and there is the holistic multi-time frame view, which can impact the view of the one reference, right? Hopefully that makes sense. Man, we're like 22 minutes behind on the questions. Okay, there's not that many more. Okay. Can you talk about when you try to hold a position overnight or even multiple days? Is it when you see, for example, a very strong bullish level and we just traded away from on the longer, which we just traded away from on the longer timeframes with a lot of room to the upside? Essentially, yes. I mean, I might take an intraday trade like today. The short was a scalp. The short was not what I call a real trade. The best trade we've had all week, but it was the right trade, right? We talked about it pre-market. That was what I was mostly looking for. My first trade of the day, I tried it as soon as that news broke. And then the market said, no, we're not ready for that. And I tried it, blah, blah, blah. It was the right read on narrative up until about where we are right now at the hard right edge, almost into the weekly level. So it's going to be interesting to see if we get that shift. You guys were too early before, not waiting for that level to get tagged and whatnot, with nothing else there to trade from, as I mentioned. Where am I in my thoughts? So for a swing trade, that's different. That's where maybe I get a trade off a weekly extreme, but it aligns me with a fresh, fantastic narrative on the yearly or the quarterly. And the monthly's a continuation play as well, right? All of a sudden, it's big time frames with big boy narratives that are saying, this is a fantastic trade location on the big time frames. Because now, if you then time something on the weekly from a CVA, from the PVA, with the intraday, with the rhythm, with the order flow, now all of a sudden you're with that huge, fantastic time frame, even though you still did all the short-term things. Today, we did all the short-term things. We knew the market needed a bit of reversion, but that's in the context of overall bigger bullishness. So it's not a swing trade, right? That's how I see it. That's how I see it. Resistance versus a bearish line in the sand. Well, they're both resistance. Okay. Resistance is just a common term that we all understand from Dow theory or wherever that came from. A bear line in the sand is the owner, the person attaching high value to a particular area of resistance. That's all it is. A bear line in the sand, often, not always, but more times than not, especially if we have kind of a clean, confluent price area for that, more times than not, it signifies it. What word do I want to say? It signifies if we breach that line in the sand, bearish line in the sand, we're actually bullish. So a little bit of weakness out of sellers here on the hard right edge into this little wick low, which is very, very close enough. Remember yesterday, our talk about areas, not lines. Now we're close enough, in my opinion, to where we can call this essentially a weekly IPB here. Market is threatening imbalance down now because of the little flaggy attempt there through the 12 o'clock, 12:30 my time, central time area where we couldn't get back into DVA. I'm still calling it rotational. It's fine. So we're going to need to see this I period excess below G period remain if this trade's going to hold. Hopefully that clears up any confusion around just a resistance area versus a bearish line in the sand. They're both resistance areas. We're assigning importance, and there's implications to that assignment sometimes. Does the quote board in Sierra automatically update to the front month? I think it can in this little settings. Yeah, auto rollover future symbols. I tend to leave that off. I don't want it to roll when it whatever calculation tells it to roll. I want to see that volume column. Which one's bigger? Okay, now the next one's bigger. I just want to view that. So I turn that setting off. So it depends, whatever you want it to do. ES NQCL says, in the morning when ES was in a tight range, whereas given if delta was with steep slope, please explain why you described it as a lack of selling instead of absorption. We've been through this concept several times this week, guys. Sorry, that sounds rude. When you have, where is the, there we go. You just need to go back and listen to some of those recordings. I'll just briefly cover it again here. Price, delta. This is going to be absorption. This is going to be not absorption. Okay, so we'll just make price going sideways. This is absorption. Let's call that normal. Let's call that normal. That's not normal, and that's normal. Where's something not normal? It's from here to here. What happened? Buyers pressed, and they didn't get what would be normal, the amount of reaction and price for that effort. They were absorbed by a passive seller throughout this period here. Other times, however, we look at delta versus price for the same pattern, and we say, okay, normal, not normal, normal. Doesn't matter what happens from that point forward. We already have our example. This is not absorption. From A to B is normal from delta relative to price. From C to D is normal in terms of, again, I'll say it a different way, the same thing, the amount of buying relative to the amount of movement. What went wrong? What's abnormal here? It's B to C. Price went down, but there weren't any sellers. So delta is higher, right? In both example of absorption and non-absorption, delta is higher in both of them. One of them is absorption, one of them's not. And I walked you through here, again, why that one is one and one is the other. How long do you consider a condition shift to be fresh? Is it relative to the time frame of the reference? Do you look at other factors besides time? Freshness is relative to mostly the dynamic of how recent, time-wise, I suppose, was the condition shift. But I, more so than thinking of it in terms of time, I think of it in terms of like rotations or other things being done. For example, destination getting hit, right? Now all of a sudden it's really, really, really not fresh, right? So it's just that chronological order of these potential events. Condition shift, number of rotations, number of retests into an area, how far away we get from there. Does it reach a destination? Does it not? Things like that. But you're not far off in terms of time, but let's say price matters too, I guess. Beavis says, Merritt, having been in the room for 4 days, haven't started the Natural course yet. I wanted to absorb everything this week before starting that. I'm sure your head has been spinning a little bit. Once started, how do we check our chart levels, hypos, et cetera, to make sure we're doing it right and progressing since going through it individually? Do you post yours daily in the room? It's called a DMI. I'm not sure if you've ever seen that. It's I put out my prep when I am available to do it, and when I see something worthwhile, you can check it against the DMI. But wait, there's more. Equally as beneficial, you're going to find people in the community that consistently do preps and share them, and you see that they're good at what they do, right? That theirs typically match up with mine, things like that. There are discussions each day around narrative within our community. So it's not just about me. Obviously, when you get a DMI from me, it's usually pretty good. I tell people probably, 85% of the time, mine's the gold standard. The other 15% of the time, there's some room for interpretation. There, you could maybe weight something a little differently than I did. You could focus on something more structural, where I chose to ignore the structural and go with the more long-term VWAP. There was some things to do and handle and some tiebreakers and stuff like that. More times than not, the peers in the community should match up with my DMI, should match up with your work, as you progress and get proficient. So anyways, good question. That's a great way to check. All right, last question. Is there a way to move both chart region 1 and chart region 2 at the same time? My delta and price chart is having to be manipulated separately. So as price and delta move upwards or downwards in the chart, keep that the same without manually moving it. Well, first of all, sometimes they go in opposite directions. So you don't want, if all of a sudden one went up and one went down, you wouldn't want those axes to move the same way. You'd need them to be independent. One thing that I like is to set my scales to constant range. Okay. And not only constant range, but going into scale settings, constant range, you could set it to keep the last bar within view if you want. That can be helpful, especially on the delta chart when you're scrolling around and looking at historical stuff. Or you can go straight up manual mode, and then you can uncheck recenter on chart scroll. But again, then it depends on what you want. Just know that Sierra is going to be flexible with how you handle those. I'll let you guys continue the conversation there if there's and that would be a great Sierra thread within our community in the Sierra section to discuss as well, if I didn't adequately answer it there, which I doubt I did. All right, guys. Look forward to the review today. We got something, a nice little winning trade there to review. We had some chop sequence to review, which I feel like I traded pretty well again. So yeah, we'll see you guys after the close. Take care.